Hello and welcome to a fresh new edition of Bazaar Morning Call. I am Prashant. With me, my colleague Nigel, and Rima joins us all this week as well. Good morning, guys.
Hi, good morning.
Great to start a new week. It's a lovely Mumbai morning. The best weather in Mumbai all year through. But, the market setup is perhaps a little more subdued. And I think the wait for new highs in the Nifty perhaps becomes a little longer. We'll see. That's the Nifty for you, and where we left off, 18,512, about 100 points away from new highs. But this morning, the SGX is showing a lower start, and that is something which we will watch out for. It's showing a 90-point lower start. The main event, which we will talk about a little later, is the Powell speech, which is bang in the middle of the week on Wednesday. The speech from the main man of the Fed has caused markets to turn, tumble in the past. Will it happen again? We'll see. And of course, there are these protests in China over the weekend, over the last couple of days, which are building up. Will that amount to anything? I mean, it's showing up in markets in a big way in Asia. It's showing up for the Chinese currency, which is down about almost 1% the last I checked against the USD. And that is something which I think will be important to track as well. But let's kick this off. Good morning, guys.
Hi, good morning. Hang Seng is down 3.5%. The Taiwanese markets is down 1.8%, and the Chinese markets are down 1.5%. So that could cast a bit of a shadow on the Indian markets. But finally, we've been dithering for so long on. Towards the end of last week, we got some signs that markets are trying to attempt a bit of a breakout move and perhaps get to its all-time high levels. The Nifty and the Sensex gained 1.1% last week. And the big driving force is going to be the decline in crude prices and the strong FI buying. So yes, in Friday's trade, the FI buying was offset by the DII selling. But in the month of November so far, the FIs have bought nearly 11,500 crore rupees. And look at crude prices and the tumble that we've seen. Crude prices are now below $82 per barrel, and that's going to provide that tailwind for our markets.
That support, right? That much-needed cushion. Oil prices, single-handedly, absolutely. The most important thing as far as Indian macros are concerned. But what are we watching out for? The big event, as I said, is the Powell speech in the middle of the week, which I think will kind of differentiate what happens in the first half and the second half. Markets may trade in anticipation to that. We've heard the Fed chair earlier kind of jolt markets out of complacency. You remember the Jackson Hole speech, 8 minutes short and sweet, and he kind of said, well, there needs to be a lot more to be done. But I think this time it's different because we've got data which is kind of telling us that things are slowing in the US. But even more than that, we just had FOMC minutes last week, right, which showed us that maybe the pace of Fed hikes are going to go slow. So it'll be very unlikely to see the Fed chair going hammer and tongs again and saying, well, a lot more needs to be done and all of that. So the bar will be very high for markets to receive a hawkish message. Whatever he says, the bar will be high for a very hawkish interpretation. Can't rule it out, but I would say that the bar is high in that sense. Lots of data out of the US this week as well, which I think will give further fillip. There is the inflation number, there are job openings, there is the ISM manufacturing number, and of course towards the end of the week, which is on Friday, we get the November jobs data as well, which I think is very important. Just a few other points in terms of the market structure in the US. One is that on the S&P 500, the put-call ratio is reaching record levels. It is something similar here in India as well. That is one. And second, the S&P 500 WIX is now close to year-to-date lows. It's basically getting to lows from where it has bounced earlier. WIX going down attracts flows, but it also suggests rising levels of complacency. So keep an eye on this. These two factors. Both these suggest that maybe at the margin one needs to be a little careful out here. But I would again say, I said this a few weeks ago, two things, momentum and the calendar. By calendar, I mean it's usually very unlikely that you see a massive new trend either up or down this late into the year as you wind the year down. And I would say because of these factors, perhaps there is more to go here on the upside before this starts to turn or in any meaningful way in that sense. Volumes in any case are lacking and thinning out. In India, I just want to repeat a couple of points I made on Friday on the editors roundtable. There is immense bullishness. We're waiting for new highs, but just these data points tell you again that at the margin one needs to be a little watchful. Futures premium on Friday on top of spot closed at 151 points. It's at a record high. FI long positioning is at a 2-year high. This is all based off a Thursday's figure, and some of these numbers would have changed a little bit, but the broad direction is clear. FI long positioning is a 2-year high. Client positioning, by the way, which is, HNIs, etc., which was also long, that is wound down. It's very small now. Number 3, DIIs, that is the second highest short position on record. FI is long, almost at records. DI, second highest short positions on the record. And market-wide puts exceed calls, again by somewhat of a record, which again means that, you would normally say, well, puts exceeding calls in such a large fashion provides comfort, and it does. But if you go back in history and look at when, this has reached these kind of levels, it usually marks a bit of a turn. So all I'm saying is be mindful. There is exuberance in the system. People are long, these are times when one needs to watch things a little more closely. Buy on dips has worked, but I think, you need to be cognizant of, small pullbacks, small changes, especially important if you're trading this market. This morning, SGX indicating a 80-odd point lower start. Nigel, what are you watching?
Well, on Friday's trading session was as good as any. And we keep talking about the Nifty. But for me, I say the session was the best, actually, is because the broader markets participated. And that was lacking the previous 4 trading sessions. A lot of portfolios will be feeling good. And I'll track that very closely because the breadth of the market was something that was getting a little bit worrying. On the cash market side, well, the institutional numbers, they cancelled each other out. What are the FIs doing in the F&O market? Well, they've been net long and aggressively net long. They added some shorts. Close to around 13,000 short contracts is what they've added. And that's why the long positioning has come down to around 71%. So they remain net long, but it's come down a little bit. Now, on the call side, they wrote close to around 1.85 lakh calls. And that's in the ratio of close to around 5 calls for every 1 put. So at higher levels, you're expecting some bit of a supply that's coming out. And 2 active strikes is what we saw. 18,500, 18,600 calls, both of them very, very active. There was an open interest addition of close to around 50 lakh shares at both these 2 strikes. The premium is anything between 60 to around 110 rupees odd. So that gives you some bit of a supply resistance at higher levels. However, we did see the 18,500 put as well. That was very active. And the premium is around 80 rupees out there. The open interest build up was close to around 25 lakh shares. So there'll be some bit of support at the lower end as well. Now, normally we only look at the Nifty, open interest and the options data. But the Nifty bank, it's a bit of a rarity. More than 30 lakh shares were added on the 43,000 call. The premium started at around 500 rupees and ended close to around 300 rupees. So that's giving you a sense that maybe at around that 43,500 odd, we could see some bit of a resistance on the Nifty bank. It's a bit unnatural that we see such a big open interest build up. So I thought we'll highlight that. Let's plug in the numbers then. The Nifty support level, since you have the highest open interest on the put side at around 18,300. The crucial range will be 18,250 to around 18,300. However, since there was aggressive call writing at around that 18,500, 18,600, you plug in the premiums out there, and that's telling you 18,650 odd. That'll be a bit of a resistance zone. You're getting a dip today. At some point of time, maybe track the first hour lows and look to get into the Nifty because the buy on dips has worked. You keep the stop loss at around 18,300 and hope that, in fact, we're likely to see more of what we have seen in the last few days. Rima.
Well, I'm also watching what's happening in the Asian markets, particularly the unrest in China right now over the stringent COVID-0 policy. And usually we do not see this public large-scale dissent in China against the government, but this is happening this time. 3 years into COVID, and the COVID-0 policy, which has been taken on by the government, is now having a toll. There are the footages that you can see over the weekend. And now investors are watching how Beijing is going to handle this brewing crisis, because it is a tricky situation. Despite the stringent measures, China's COVID cases hit an all-time high record over this weekend, right, since the pandemic began. So can they really accelerate reopening, which is the hope, in the global investors' mind? Or are they willing to go ahead and take fresh lockdowns against what the public wants right now? So this is a bit of a tricky situation. And remember, if they try and go ahead and do fresh lockdowns from here on, not only is it going against this public outcry that we are seeing right now, it's also a bit against what China is trying to do. It's trying to stimulate the economy. Remember, on Friday, it cut the reserve ratio requirements by 25 basis points to boost lending. So markets in China have been swinging like a bit of a pendulum. On one hand, it goes up. when there are reopening hopes which rise, and on the other hand, they start declining on fresh lockdown concerns. So as I said, Chinese markets are down 1.5%, Hang Seng is down 3.5%, and Taiwanese markets, because there are a lot of semiconductor linkages, those markets there are down 1.7%.
It's
yeah.
crazy, right? I mean,
absolutely.
Three years and you're still doing mass testing, mass vaccination, you know, long queues, bolting people behind doors. I mean, there is shots of, government officials welding doors in apartment complexes. Absolutely crazy. I mean, those shots are actually quite amazing. But I just want to say that, you know, when something like this erupts, right, we tend to overestimate the impact of what this will really amount to at the end of the day. It's too early to say. No one knows. It's a very, very large country. But will this cause, like, for example, this morning I was reading Chinese newspapers, the Communist Party mouthpiece newspapers are all urging officials to kind of apply these COVID policies, these new COVID policies in an absolute unsparing way. They're saying, well, do it. It's your job. I mean, so there is no real, pullback in any sense. But the larger point also is that, in a way, this is to be expected because and I think a lot of the global guests who've been on the program also agree that they are on the path of reopening. It's going to be slow. Right? They will be, and it's winter. Their vaccines don't really work as well as other vaccines. So it's going to be a little bit of back and forth. But we'll see. It's interesting what's going on. Markets in China, by the way, have bounced very nicely from lows. So, we're seeing some of that pullback in China and the rest of Asia this morning as well. Rima.
Absolutely. As I said, can they accelerate reopening when COVID cases are at record high levels in China since the pandemic began? That remains to be seen. Quickly, the cues for the week. We spoke about the global cues, and that is the US Fed Chair Jerome Powell's speech on Wednesday. And this is going to be amongst his last speeches ahead of the blackout period before the FOMC decision in December. And you've also got the US non-farm payrolls on Friday. But looking at the domestic cues, Q2 GDP data is out on Wednesday, and you've got the monthly auto sales numbers coming out on Thursday. So that's what the earnings and the economic calendar, economic calendar looks like for the Indian markets as well as global markets. But let's get some opinion.
Absolutely. Lawrence Belanco, Arima, of CLSA says that after 3 weeks of hesitation, the Nifty looks primed for a breakout with momentum confirmation. He says such a move would be a bullish event and signal a resumption of the market's long-term uptrend and would provide an initial upside target of 20,185. In addition, he sees similar potential in the Nifty Small Cap Index. At the stock level, he flags Mahindra & Mahindra and Eicher Motors as sort of profit-taking candidates, with Axis Bank and Max Healthcare as candidates on the buy side.
Rhythm Desai of Morgan Stanley says an uptrending profit cycle, a likely peak in short rates in Q1 2023, and ebbing global macro risks relative to 2022 make the case for absolute upside to Indian stock. That said, Rhythm adds, India's relative gains may take a breather in 2023. They are overweight financials, technology, consumer discretionary and industrials, and underweight all other sectors.
Well, let's get you some money market views as well. Kunal Sudani of Shinhan Bank says concerns surrounding Russian oil price cap, China's COVID conditions weigh on prices. He says Brent crude prices sustain at lower levels, while dollar index may face strong support at 104.9 levels. He says ECB's Gabriel Mikhoff teased smaller interest rate hikes for 2023. For the dollar INR, 81.5 to a dollar may act as a support, while 81.98 to a dollar is a resistance.
On the bonds, B. Prasanna of ICICI Bank says global yields softened post the Fed minutes on expectations of slower rate hikes commencing from December. However, he says continued supply and profit booking by nationalized banks kept the domestic bonds range-bound, and he expects it to continue going into next week's MPC meet. He expects the 10-year benchmark bond yield to trade in a range of 7.2 to 7.35%.
All right, so that's what's coming through in terms of calls and views across asset classes. Mark Matthews of Bank Julius Baer and Company is joining us now to take some questions. Mark, great to have you with us here. Thank you very much. You know, Lawrence Belanco, chartist at CLSA, is saying fresh breakouts on the Nifty are here. And small caps, broader markets here should do very well as well. What are your thoughts, Mark? The new thing, there are two new things, I guess, as we start this week. There is all these protests in China, and then we, I guess, wait for Fed Chair to speak on Wednesday. Go on.
Well, with the Nifty, it is an emerging market, and to my mind, the consensus is still negative on emerging markets, which you can kind of understand because China's the biggest one, and we're all seeing what's happening there. But a lot of people know there are many other emerging markets apart from China. Anyway, my hunch is that he's right, and they could have a good year next year if it's true the dollar has peaked, which I think it is, and the U.S. doesn't experience a very deep recession, which I don't think it will. The most interesting index, in my opinion, actually is the Dow Jones Industrial Index, because as of Friday, it was up 19.7% from its low, which was on the 30th of September. So it's just a smidgen below actually being technically a bull market again. You wouldn't think so, but that's what it is. With China, what I would say is that short term it looks very bad, of course, but medium term it could be good if they finally let go. And that's something that nobody knows the answer to, but I would say that as opposed to back in April, which was the last COVID surge, when only 100 cities were seeing COVID cases, today it's over 300 cities that are seeing COVID cases. I don't see how they can stop it. So if they come to that same conclusion and they let it go, I think the market would react positively to that.
Mark, morning. What about Fed Chair Jerome Powell's speech on Wednesday? What's the expectation it will be amongst his last before the blackout period ahead of the December FOMC meeting? Should we expect a change in, to align itself with the market expectation that going ahead we are going to see lower interest rates? Can we expect some change in guidance?
Well, if we put ourselves in his shoes, I think we can understand the policy that the Fed has chosen, which is to try to walk down the middle. Because on the one hand, inflation is still very high, as you know, 7.7% in the United States. But on the other hand, there are signs of dysfunction in financial markets, and there are signs that we could get a recession in the United States next year. In fact, the Philadelphia Fed does a quarterly survey of 38 economists. It's been running that series since the 1960s. And last week, they came out with the fourth quarter numbers, and 43% of, I should say the average of them saw a 43% chance of a recession over the next year, which is the highest on record. So that's why I think they're doing what they're doing, which is they can't declare victory on inflation because it is still very high, but they have to do something to show that they acknowledge the dysfunction in financial markets and the possibility of a recession next year. So they're saying, well, we'll raise rates, but at a slower pace than before. And I suspect that is the message he will reiterate in his speech this week.
All right. Hi, Mark. Good morning. Mark, just when people are thinking that India is getting expensive, China seems to be getting themselves into a bit of a mess yet again. And that entire shift of India to China, that seems to have taken a pause, at least for now, going by what data points we have. Do you think that India still will be the beneficiary, or do you believe that at some point of time that China valuation will make it more attractive?
Well, Nigel, I'll point out one interesting thing that an analyst put out on the internet over the weekend, I should say. I just saw it over the weekend, and that is the relative strength index of the Hang Seng index. So the Hang Seng index is Hong Kong stock market. And if you look at the 14-month relative strength index, so that's a momentum oscillator, it's giving you a signal of directional change. It dropped below 30, which is a signal of being very oversold, and then bounced back above 30. It only did that once before, which, believe it or not, was 1967. That was a summer of great turbulence in Hong Kong. They had a lot of riots there back then. But anyway, it was the beginning of a very strong bull market after that. And you could look at the S&P, and you'll also see that in its history, whenever you had that drop below the 30 level in the 14-month RSI, and then it suddenly popped back, tended to be a signal that you were entering into a strong bull market. So there's no reason to think that there should be a bull market in Hong Kong now, and yet somehow the market is signaling one. I can only think that if it's true, they basically just let go and walk through that same valley that every other country has had to walk through, which means, unfortunately, that a lot of old people will die. but the economy will normalize and people will go back to regular lives, like has happened in every other country except China, then I think the market would respond very strongly to that. Nobody knows. We just have to wait and see.
And Mark, I'm assuming it's natural that authorities in China would also be nervously watching what's happening in many other parts of the world, right? With these protests and whatnot, which is happening. So will they be forced to ease? That's something to watch out for. As of now, Mark, are you saying? I mean, the last time you were on, you were saying that you think into 2023. With all of the gains, relative outperformance in India, maybe the market share takes a bit of a backseat, and within emerging markets, China does much better. Is that the base case, in your opinion?
Well, I didn't foresee these protests, so now I'm not quite sure. But I did notice when I was watching those protests on television that the majority of the people on the street are young people, which you would expect. 1 in 5 young people living in the cities in China is unemployed. And every year, over 10 million more young people join their ranks, graduating from university, looking for a job. I don't see how they can really avoid the economy getting much worse if they continue to have these protocols in place. And it's already at a somewhat precarious situation. So if I had to guess, I think they're going to let go. And that would result in a very strong stock market. But it's hard to say, it's trying to analyze the politics there is very difficult.
Mark, pleasure speaking with you. Thank you very much for joining in. Get into a break. On the other side, our list of top 10 stocks is lined up next.
Welcome back. You're tuned in to Bazaar Morning Call here on CNBC-TV18. Well, for starters, the SGX Nifty suggesting a bit of a downtick, but there'll be plenty of stocks on our radar. So let's get straight to CNBC-TV18's top list of stocks that we're tracking. Well, Rima, you go first. You're tracking the auto space?
Indeed. So let me start with Hero MotoCorp, where prices are going to go up from 1st of December. So Hero MotoCorp has said that they will be increasing prices up to 1,500 rupees. The exact quantum of increase will depend on the market and the kind of variant, the specific model, etc. But this would be Hero MotoCorp's 4th price increase. The last one was in September when they raised prices by 1,000 rupees. The next set of stocks that I'm watching are Ashok Leyland as well as Tata Motors, because the Ministry of Road, Transport and Highways has said that all the vehicles belonging to the government, as well as all buses which are more than 15 years of age, will now have to be scrapped. So this opens up an opportunity for Tata Motors as well as Ashok Leyland, which play in this space. These will be effective from 1st of April, but right now the government is seeking some suggestions in the next 30 days. Separately, remember there were newspaper reports that JLR is undergoing some production cut till March because of semiconductor shortage issues, etc. To which JLR has responded. They're saying we continue to actively manage the operational patterns of our manufacturing plants, the industry experience, semiconductor supply disruption, demand remains strong, and they expect performance to continue improving in the second half of this year.
Remember the scrapping of vehicles, it's government vehicles right now. Yeah. But in Delhi, for example, right, I think diesel vehicles can only be run for 10 years and petrol vehicles for 15 years. And after that, it doesn't matter if your car is run 5,000 kilometers or 10,000 kilometers over 10 years. You've got to scrap it, right?
Yeah.
And I mean, I have friends who've had to do this. And perfectly good cars. It's not there in other cities, in cities like Mumbai, etc. But it is there.
But the pollution issue in Delhi is far more acute, I guess. Which
no, it is acute, but it's one of those things. We'll see if this kind of gets implemented. This is for government vehicles, as Rima said, and private vehicles, of course, another ball game across the country. Now, Sonal is standing by. Ami Organics and Shriram Properties are in focus, and she's going to tell us why. Sonal, hi, morning.
Good morning, Prashant. Let me start with Ami Organics because the company has announced to the exchanges that they have signed a multi-ton agreement with Fermion worth multi-million euros. So they have not given us the quantum of this particular contract, but they expect this to substantially contribute to revenues from FY24. Shriram Properties, where the company via its wholly owned subsidiary has acquired 100% stake of Suvilas Realties Private Limited, which is a Bengaluru-based real estate company. The development potential here is approximately 660 residential units in 6.29 acres of land. The consideration is around 30 crore rupees and they plan to develop and sell it. So these two stocks will be in focus.
Okay, all right. Thanks a lot for that, Sonal. Well, let's hop across to Surbhi. She's here to tell us about SBI cards. Surbhi?
The monthly credit card statistics are out, and in the month of October, SBI cards have added 3,39,000 cards. The total number of credit cards were up 19% on a year-on-year basis and 2.3% on a month-on-month basis. The monthly spending is largely flat on a month-on-month basis, but up 22% on a year-on-year basis. The year-to-date market share was maintained at 18%. The daily spending data from RBI suggests that there is some slowdown on a month-on-month basis due to the higher base in October, but overall good numbers from SBI cards.
Okay, Surbhi, but we can't let you go at that. SBI cards, we've got the details. What about some other stocks and news?
Few other stocks that will be on my radar today. The first one is IEX, where the board approves a buyback for an amount of rupees 98 crores. The maximum buyback price is set at 200 rupees per share. The buyback is to be done via open market route. The company also forms a subsidiary to explore opportunities in the carbon market. Next is HDFC Life, where the insurance regulatory approves the merger with Exide Life. Next is Max Financial, where the insurance regulatory gives approval to acquire Mitsui Sumitomo's 5.17% stake in Max Life at 85 rupees per share. With this, the company's stake in Max Life is increased to 87%. Lastly, Paytm, where RBI has asked Paytm to resubmit an application for an payment aggregator license within 120 days after seeking the necessary FDI approvals. Also, RBI has restricted onboarding of new online merchants. Management is hopeful of getting the relevant approvals and expects no material impact on the business.
Surbhi, thank you very much for that. A quick recap then of the top stocks this Monday morning. Stocks with positive news flow are Hero Motor Corp, Tata Motors, Ashok Leyland, SBI Cards, Ami Organics, Shriram Properties, HDFC Life, Max Financial Services, and Paytm. While stocks with negative news flow is IEX. Get into a break. On the other side, Prakash Diwan will join in.
All right, welcome back. Let's get Prakash Diwan in. He's joining us now to take some questions on market fundamentals. Prakash, great to have you with us here. Thank you very much for your time. Just a quick word as we start another week, new week. How are things set up? 100 points away on the Nifty from a new high, although the start is lower. What's the broad approach? What should be the broad approach?
Good morning, Prashant. So I think, the Nifty is very clearly showing its characteristic hesitation, which typically happens when you are closer to highs or at the highs, right? And given the fact that there's a huge element of shorts, and this time from domestic institutional players, there could be a bit of short covering that could still see Nifty inch up. And I'm quite confident all-time highs are definitely going to be crossed and new ones made. The essential part is, when do the broader markets participate in this upswing? That's the key element. Now we are looking at very divergent news flow from China and Hong Kong and stuff like that. I mean, Hong Kong shows signs of bottoming out, whereas China seems like getting into a little bit of a messier situation. But then it's a black box, so I wouldn't really put too much of weightage on what's expected out of China. What's working for us is lower crude, probably a peaking out of inflation, or a sense of that. We are closer to it than before. So all those things will work. But mind you, we are at fairly decent valuations at a stage. So the market could see a little bit of a last hurrah before it starts rationalizing itself, consolidating itself. My guess is December will probably be a little bit of a celebratory kind of a month. And then you'll probably see the corrections happen. So the setup is very clear. Cash out of what you don't like in your portfolio, and wait for a couple of months to get into what you actually like. So that's especially for small caps and mid caps. That's my anticipation. But otherwise, I think it looks like any other market: low volumes, closer to highs, December end. All of those typical things that kind of bring a little bit of a lull into the market.
Prakash, Paytm, RBI has now barred Paytm from signing on new or onboarding new merchant clients. Is that a big blow to, at least the sentiment and the stock price from here on? The company says there is not going to be a big business impact, but a new business gets affected, right? How would you read this development?
Good morning, Rima. So I don't think you could say that this does not impact the business. In fact, there are so many of these optionalities built into Paytm's business model that we said, there would be some sort of revenue streams occurring from other things apart from their mainstay money transfer business. But the ability to acquire new clients and start getting into a stage where you figure out how to monetize that, I mean, you're still far away from that. So that's a big problem with Paytm. It hasn't been able to re-engineer its business model rather than go by the metrics. I mean, I don't see that visibility even right now. So and that's exactly what the point everybody was making at the time of the IPO. I mean, some of us were making, if not all, that there was lots of lacuna in terms of what is it that they're going to make money on, right? So that's still kind of a little bit of a question that's on, and this RBI thing only kind of defers any ability to monetize things, right? To do that. So this resubmission of application, it's a process that's going to get into a reset and could take much longer, and that's painful because people will probably start seeing better opportunities even at current levels to move out, book profits, book losses, and move into something more promising.
Hi, Prakash. Morning. Prakash, some of those Asian markets that have opened up, they're under pressure. But the big story, really, from an India perspective, is Brent crude prices are lower. And there'll be some beneficiaries out there, right? How do you play this? Because it seems that periodically we're seeing a bit of a bounce on crude, but it continues to head lower. OPEC meet coming up next week, though. Any kind of stock that you look at as a key beneficiary out of this?
A good one, Nigel. Oh, absolutely. I mean, I think the downward trend in crude is going to benefit so many of our sectors directly or indirectly. But one of the key areas that it has a very direct correlation is aviation. And this is a pocket that very few people want to tread, right? I mean, it's something where the faint-hearted can't take that volatility and the kind of news flow that comes around. And you don't have much of space in terms of the listed entities at this point in time. And we've spoken about this. I remember Rima asking me about how the consolidation within the Tata flyers, flying companies will kind of impact the sector. And my sense is that process is definitely underway, but it will still take almost like a year for them to get their act together in terms of making it commercially differentiated. And that's the time where Indigo is probably going to march ahead, eating into market shares, eating into some very profitable routes. And this recent tie-up with the Turkish Airlines is something which gives them access to so many new destinations that the learning curve is going to be much faster. And mind you, they've also got, finally, they're looking at getting Boeings into the fleet, which is a very good de-risking of sorts from the Airbus dependence. So I think if you look at crude benefits and, of course, the way things are looking up, the fares are looking up, I think Indigo will be a very key beneficiary if crude stays where it is or probably tends to be lower. And it has some ground to cover, at least till 2,400 from where it is right now.
Prakash, to stay on, we want to invite the management of Repco Home Finance on the show now. The company has seen very strong disbursement growth. Sanctions too have risen in Q2, but the AUM growth continues to remain quite sluggish. The company has guided for a loan book of 13,000 crores by the end of the year. K. Swaminathan, the MD and CEO of Repco Home Finance, now joins us on the show now. Good morning, sir. It's a pleasure having you here with us. This is Rima here. That's the first question, right? Despite a very strong disbursement growth, your disbursements were up 16% on a quarter-on-quarter basis. Yet your AUM growth was only 1.7% if I look at it on a sequential basis. Why is that? And what is the guidance on AUM? Will it continue to remain challenged?
Good morning, madam. Thanks, Rima, for having us on the show. Yeah, the one is for the last 2 or 3 years, there were some headwinds as far as this company's growth was concerned. Now we have brought back the headwinds, we have brought back the disbursements, and disbursements are at a very high level in the current year. This year, we need to have more stability. That's our plan of action. So as far as AUM is concerned, I would like to tell you, see, the company is 20-year-old, so there is a normal repayment itself is around 50 to 60 crores. And there are some prepayments and all that. One thing that company was facing is the BTs. Because of our interest concessions, some of the bigger players used to take over from us. That is getting addressed. See, our interest rates now are in sync or more or less in line with the risk that we are facing. So hopefully in the coming months and coming quarters, these BTs will come down and our AUM growth will be in tandem to our disbursements. That is our expectation.
Okay, hi, good morning, Mr. Swaminathan. Give us a couple of numbers then. I think your repayment rate is around 17 to 18%, if I got that number right in your past con call. Give us a sense about, what could be the disbursements you're looking at for the second half of the year. And we'll also need to track this repayment number. What's the scheduled repayment that we have for the second half of this year?
Okay. See, as far as disbursements are concerned, we are expecting a disbursement of around 1,600 crores. This is the normal organic disbursement that we are expecting in the second half. Repayments are likely to be normal. Repayments are around 500 crores per quarter. This we are trying to shrink as much as possible, especially these BTs. Hopefully, with our efforts in containing the BTs, we expect our loan book growth to be near about 13,000 crores. So around 1,600 crores of organic disbursements and a net of some 1,100 crores, 800 to 900 crores of repayments. I think we will still be near about in the shining distance of 13,000 crores.
Okay.
That is the expectation for 31st March.
Okay, all right. So you're telling me that your loan book at the end of the year will be around 13,000 crores, right?
Nearby 30,000 crores.
Okay.
If not exactly, somewhere near.
Okay, all right. On the NPA front, the holiday for the restructured book, well, that ended in the first quarter. How are things shaping up out there? And could you give us a sense about your, NPAs? What will it look like, say, by the end of this year?
See, NPS, the worst I should say, is over in the second quarter because of a restructured book of around 700 crores hit us the second quarter. Thankfully, because of the efforts taken by the entire field, we were able to contain, even though there were certain slippages from the restructured book, because of the recoveries in non-restructured books, we were able to contain NPS to a large extent. Going forward, since the restructured book is behind us, so we will be able to contain the normal NPS, and we are hopeful that we will be back to around 5% in the GNPA level. And the net NPA level should be below 3% by 31st March. That is the expectation. And we are quite confident that we will be able to reach it.
Right. Mr. Swaminathan, hi, good morning. Just to stay on asset quality, will most of your efforts to stabilize asset quality be via recoveries, or will you look to sell loans to ARCs, etc. as well?
Thanks, Prashant. We are having all the options before us. So far, we have not done any ARC sale. That is one thing. But because of the efforts taken by our field itself, we are seeing sizable momentum in recovery efforts. That is why, despite a slippage of around 160 crores from our restructured book, we were able to contain the net increase in the NPS to a mere 23 crores in the second quarter. So definitely, I think if our efforts are going to succeed, which we are confident, I think there may not be any necessity to go for any sale to ARCs. But that option is still open with us.
The fear, though, Mr. Swaminathan, is that there will be further slippages from the restructured book. You're saying it's highly unlikely?
It's highly unlikely because the worst is over as far as restructured book is concerned. Because the restructured portfolio, they have already started paying. Already some 4 or 5 installments they have already paid. Even though there may be some overdues in the restructured books, but still slippages to NPS are unlikely. So we are confident that this restructured book, slippages out of restructured book will be limited to the minimum.
So what about margins? Your net interest margins improved on a quarter-on-quarter basis. It currently stands at 4.8%, but it's still lower than the 5% plus that you enjoyed last year. Do you see margins improving to, say, 5% by the end of this fiscal year?
Yeah, we are quite confident, madam. One reason is most of our books are getting repriced in the third quarter because around 40 to 50% of our book is getting repriced. This one. And during the second quarter, we have increased our MLR, that is our minimum lending rate. Because of these effects, definitely in the third as well as in the fourth quarter, our margins are likely to improve. We have passed on more or less whatever is the increase in the cost of our funds to the customers. So the worst is over as far as NPS and as far as the other parameters are concerned.
Okay, all right. Mr. Swaminathan, your OPEX has moved up. Is it because you're trying to move more towards a non-South market? If you could give us a targeted share. I recall that most of you are South-based. Do you have a target in terms of how you want this mix to move going ahead? And what is the targeted OPEX that you're looking at if you have a ratio?
See, as far as OPEX is concerned, it will be more or less around this 20-22% level. One reason is because we have recruited quite a few number of people we have recruited in the second quarter. Well, this recruitment may continue because of our expansion plans. We plan to open around 20-25 branches in the next year, subject to our approval by the board. And mostly our expansions are happen in the Western Territory. This one of the reason is on the HR front. Second one is we have also gone for a digitalization. A new platform is on the thing. So there will be an increase in the cost because of such things. Due to these reasons, the cost to income ratio will be at an elevated level, but we will be able to bear because of the expansion, because of the increase in the AUM.
Mr. Swaminathan, last question on the split between self-employed people. You used to be heavily dependent on that segment, right? What is the proportion of the book now?
Not necessarily. See, it is more or less equal. 50-50 is between the self-employed and the salaried segment. And nowadays, our interest rates are very competitive. It is in competitive with some of the best in the industry. So we are also seeing some traction from the salaried segment to our portfolio. So going forward, yes, this ratio will be more or less around 50-50 or maybe 55-55 in favor of salaried segment.
All right.
So the portfolio will be more and more better in the coming quarters.
All right, we'll leave it at that. Thank you very much for joining in. That is Repco Home Finance for you, guiding for a loan book to hit 13,000 crore by the end of Q4 FY23 and margins too to improve from current levels. And they're quite confident that the worst of the asset quality appears to be behind them. Prakash is still with us. Prakash, any thoughts on these smaller home finance companies? They are facing increased competition, from the larger players, the larger HFCs as well as banks. Is there anything that you like? And thoughts on Repco in particular and what the management had to say?
So I think that was a very wonderful interaction in terms of giving insights into where things are with some of these mid-sized or smaller HFCs. Given the fact that there's a lag in terms of being able to reprice your book or loans, when interest rates move up, I think Q3 and Q4, of course, Repco had a little bit of repair work that was also underway, which probably seems to be getting done as per what I heard from the management. So Q3, Q4 seem like looking promising. But you know what, Rima, the whole environment in terms of HFCs is very much in favor of companies that have the ability to scale up their balance sheet size as and when they want, or probably more rapidly. And from that perspective, you see the loss of market share for the biggies like LIC Housing Finance is giving some sort of a space for the likes of PNB Housing and Canfin Homes to kind of, start consolidating their presence. So you'll probably see a shift in the market share. And I think the interesting part is the bigger HFC. So my favorite is PNB Housing Finance for various reasons. It's remodeled itself. It's renewed its management quality and all of that. And you'll probably start seeing a lot of changes there, which will be operationally, directly responsible for change in metrics. So, and then that's where you have the upside. Repco, I honestly don't track it very closely now, but my bet would be probably on PNB Housing Finance on the given setup at the current juncture.
Okay, all right. Prakash, request you to stay on with us for the time being, though. We'll slip into a short break. We'll come back. We'll continue discussing stocks with Prakash. We'll also be joined by Sudarshan Sukhani.
Okay, welcome back. Sudarshan Sukhani and Mitesh Thakkar are joining us as always to help us set up, this Monday and a new week as well. Gentlemen, good morning. Good to have both of you here. SGX is indicating a slightly lower start, but Sudarshan, how would you approach things? How are things set up now?
Good morning, Prashant. See, even without the SGX, I would have said that the markets have rallied in 4 days very handsomely. And the market has this tendency, all liquid markets have this tendency of expanding and then going through a contraction period. So today, in any case, is not a buy day. We wait patiently for the markets to decide how much they want to dip, whether they want to consolidate sideways. Whatever they do, that opportunity to enter on the long side of the market will come, maybe tomorrow, maybe on Wednesday or Thursday. So the trade is still to be on the long side of the market and look for lifetime new highs in the Nifty. But today is not a day to actually enter. Just be patient for a couple of days. And that applies to the Bank Nifty also.
All right. Sudarshan, for those who had a long position, where does their stop loss come in at? Who had carried a long position?
Well, actually, when I say that you should not be having a long position, the best trade would be to exit the trade today.
Okay.
But if you still want to keep it, 18,450 is your stop.
Okay, all right. So you're likely to get knocked out in the morning itself, going by what the SGX Nifty is suggesting. Thanks, Sudarshan, for that. Mitesh, coming across to you, you're getting a bit of a dip today. 60 to around 80 point. SGX Nifty is doing a bit of a dance out there. What's your take on the index? Do you believe we're likely to correct a little bit more, or will you look to jump in?
I'm slightly biased towards taking a long position at the gap run because the opening would be closer to about 18,450, 440 levels. That was the pivot which the market had made, earlier on the 15th and 16th of November, and had kind of retreated from there by about 350, 400 points, and then we got a breakout beyond that. So that becomes a support pivot. I think there's a chance that if you open with a 60 odd point kind of a gap, there could be some buying happening immediately. Even if not, then I think the risk reward is very favorable. So you can take a long with a very mild stop loss from those levels, let's say about 50 odd points, which is 0.3% on the Nifty value. So I think I would be tempted to go long with the 18,450, 18,440 kind of an opening and take a stop around 18,385.
Okay, let's get to stocks then. Sudarshan, what would be the trading recommendations for this morning?
Well, I'm looking at, say, lower end of the mid-cap Nifty stocks. BPCL is a buying opportunity. The stock had a trading range for almost 2 months. It's breaking out from that range. Buy the stop under 311. Gujarat Gas is my only short sell. It's an intraday short. Short selling should be done only intraday. It's a poor relative strength. Momentum is falling. So intraday short with a stop above 497. Muthoot Finance is a buy. For the last 5 days, it's been in a narrow trading range. Now, these trading ranges should usually resolve on the upside. So buy Muthoot, the stop under 1060, and Tata Consumers, again a long 2-month period when it was consolidating. That consolidation should end either today, tomorrow, day after. Buy it with a stop under 767.
Okay, all right. Thanks a lot for that, gentlemen. I think, Mitesh, could you fill us in with your picks as well, and then we'll get to our Momentumizer segment. Mitesh.
Yeah. So, in fact, I have all buy calls today. Buy on ACC if it starts getting past Friday's high of 2515. So it's only about 7-8 points away from there. Buy then with a stop at 2490 for targets of 2570. L&T Finance is a buy with a stop at 84.5 for targets of 92. IGL is a buy with a stop at 420 for targets of 450. And the final call is Indiabulls Housing, which I would want to buy on a mild pullback. Say around 136, buy with a stop below 132.5 for a first target of 146.
Okay, all right, gentlemen. Thanks for that. We'll keep coming back to you all to get an updated call on the index as well as on various stocks. But let's focus on our special Momentumizer segment then. Well, Suzlon, that was one stock that was buzzing in Friday's trading session and ended with a gain of close to around 8% or thereabouts. So good move is what we saw. I was looking at the high as well as the low for this year itself, and it's bang in the middle at around 80 rupees 50 paise. The high earlier this year was in Jan, it was at around 12 rupees, and the low was in July at around 5 rupees 40 paise odd. Now, also if you look at the traded data and the delivery data, well, volumes were massive. That's the traded data on the NSE. It was more than 5 times of what we have seen in the previous 10 trading sessions, and it's the highest that we've seen all the way since October 20th. Even in delivery data, close to 7.5 crore shares did get delivered, and normally you're seeing an average of less than 2 crore shares odd. So massive delivery, massive volumes as well. That's what backed the up move. Now the stock did move well, but the 200 DMA, that will be a bit of a resistance zone at around 8.7, 8 rupees 70 paise odd. It conquered the 20 as well as the 50 DMA in the last few sessions. So let's see whether or not it has enough on it. But we just thought we'll spot this one because it was moving with good momentum in Friday's session. Prakash, Suzlon, they're talking about repaying debt. They're talking about things on the mend at around 80 rupees 70 paise, 80 rupees 50 paise. Will you be looking at it?
Interesting pick, Nigel. So, I just want to add one thing that companies like Suzlon, which have at least their business recovering dramatically from what it used to be, let's say 2 years, 3 years back, definitely hold a lot of promise. The big question here, and at times we underestimate that, is the time that it takes to repair. What we actually don't understand is that it could take longer, but the kind of returns that you could get are phenomenal, right? I mean, from 8 rupees, it could move to 12, which is its 52-week high, and that's almost like a 50% move. But for that, a couple of triggers that you need to look at. Essentially, right now, the interest from, the nature of it, shareholding pattern, if you see, it's largely by a few ETFs, the ones that track probably the energy sector globally and all from Vanguard and all. And I remember there's not much of mutual fund play at all in this. I mean, it's more of banks which have had to probably convert their debt into equity and they're holding that. And then, of course, there's a family holding from the Sanghvis and things like that. So, the shareholding pattern is something which tells you that there's still a lot of retail ownership in this name. And that would probably mean that every rise would probably see some exit from people who have been holding it for too long. The fatigue will probably represent on the screen. Interestingly, the debt restructuring that they're talking about is underway, and the rights issue probably was the first big step in that. But they still have a 100% pledge on that minuscule under 15% holding, Nigel. So I believe that there's some more way to go to indicate that the repair is finally going to start impacting. So I don't want a situation where people buy in and then they lose patience that nothing's happening. But as and when that happens, of course, it will be evident in the numbers first. The Friday move probably was something which did catch everybody's attention, given the fact that on Thursday there was hardly any volume, just 3 odd crores or something, as you pointed out rightly. So there could be some buying that's happening from more risk-taking investors or long-term investors. But we'll have to wait for the metrics to change, for the fundamentals to change, which is not yet getting fully reflected in the numbers, Nigel.
And if you guys remember, Suzlon was it used to be, I mean, the name used to be taken in the same sort of level as L&T.
Yeah.
I mean, actually, it used to be...
part of the Nifty.
I mean, part of the Nifty, I think the market cap of Suzlon was also, I don't think anywhere close to, I don't remember now, this is 2008, 2007. But it was a big one. The first mover in the wind energy space. Of course, Mr. Tanti, the late Mr. Tanti now, really, I mean, very, very ambitious. But like so many other infrastructure stories at that time, what I think did them in was, of course, debt to acquire companies much larger than themselves. And of course, the market turned very, very sharply downwards. But that's Suzlon for you. We'll take a quick break here. We'll come back with the pre-opening rates, which is about 4 minutes away. We'll also have Anand Agarwal of Sterlite Technologies to